Today we're talking appraisals. All right guys, hot topic right now. So most home buyers are wondering right now whether their home is gonna appraise or not. And in this video, I'm gonna cover what an appraisal is, what they're for, and what to do if your house doesn't appraise. Hi everyone, I'm Heather. I'm a real estate agent here in Southern California, and today we are talking appraisals. Okay, so an appraisal is going to be what a lender orders on a house if a buyer is financing it. So anytime someone's using financing to purchase a house, that lender is going to order an appraisal on the home. And what that means is that they're going to have an appraiser come out to the property, inspect it, and determine a value of the property. And they're going to use that value in order to determine how much they are able to loan you on that house. So basically, they're doing that to cover their end to make sure that it makes sense and that it's a good investment for them. Currently, the demand for housing is very high. I think that the pandemic did cause a lot of people to want to make a move. And unfortunately, the inventory for houses is very low. So when that happens, it creates what we call a seller's market, and that's what we're currently in today. And being in a seller's market could make it so that sometimes when you do go to get an appraisal on a house, the appraised value will come in lower than whatever the agreed purchase price is. Another thing that happens is houses will get multiple offers, and when that happens, the houses usually end up selling for above asking price. So when an appraiser comes in and determines the value of a home, they don't have as much comparables, or if they're not looking at super relevant comparables and keeping in mind the pretty drastic change in the market that's taking place, then it's likely that the appraisal will come in lower than the agreed purchase price. And you have a few options when that happens, and that's what I'm going to cover here for you now. So let's go ahead and work with an example here. Let's say that a house went up for sale for $800,000 and the buyer made an offer for $830,000. They really wanted this house, they knew there were multiple offers on it, and they were willing to pay $830,000 to purchase that home. So what happens now is, if that buyer was financing for the house, then the appraiser is going to come in, inspect the home, and determine a value of the home. So let's say in this example that the appraised value comes in at $800,000. So it's in line with what the original listing price was. So now what we have is a $30,000 appraisal gap. So because the purchase price is $30,000 above the appraised value, now we have a $30,000 appraisal gap, and now we have to figure out where is this $30,000 going to come from, since it's not going to be covered by the loan. And the first option I would say, if the buyer has the means to do so, would be for the buyer to cover the difference. If they are able to pay cash that $30,000 and they're comfortable doing that, then that is an option that's available. Another option is that the buyer and seller could agree to pay the difference equally, so they can split the difference in half. And that would mean in this example that the buyer is going to pay $15,000 and the seller is going to pay $15,000 to cover the difference. A third option is that the buyer can ask the seller to come down, so they can try to renegotiate the purchase price. And the seller, they don't have to come down, but they might want to work with the buyer somehow, because if it is a FHA loan, that appraisal value, that appraisal is going to stick with the house for 6 months. So the buyer can ask the seller to come down. The seller doesn't have to, but again, it is in the seller's best interest to at least try to work with the buyer at this point. So the next option is that the buyer can choose to back out of the deal if they want. They could say, I don't want to pay $30,000 over the value of the house, and I'm going to back out. They will be able to get the deposit returned, but they won't get any inspection or appraisal fees returned. And the last option I'll share is, you can try to dispute the appraisal. It's very rare that an appraiser will go back and change the appraised value that they came up with originally, but you can, if there's maybe certain information that you have on the house that possibly wasn't disclosed, or even just double checking and make sure that the appraiser did have all the correct and updated information on the house, just to be sure that that they had all of the correct information to determine that value. That's an option, but again, it's very unlikely that that could happen, but it is an option and it is something to try if you really do think that that appraised value did come in low. I really hope this video was helpful for anyone who happens to find themselves in this situation. If it was, please do hit the like button, and happy house hunting!